Hello, Meifan. Nice to have you here. It's a pleasure to have the possibility to speak with you. How are you today?
Good, thanks. Thank you so much for having me.
It's a pleasure. It's a pleasure. And I would like to just jump directly into it. I would like for you to introduce yourself, introduce Waterpoint as a fund. I know that you guys recently closed the first fund. First of all, congrats for that. And I would
Thank
love
you.
to hear about your experience about it.
No, absolutely. So Waterpoint Lane was started a few years ago. So originally started as an SPV by my business partner, Ben Gibbons. I was based in Toronto, and he and I actually met from our previous company, and we were both very much aligned in terms of, our excitement about deals, about startups, and particularly within this sector. So Waterpoint Lane is a venture capital firm that's focused on disruptive innovation that's transforming the food system. So
Mm,
all of the companies that we look at, they're typically late seed stage. We go as far forward as Series A, and all of the elements are sort of encompassing the food system. And
mm,
so we decided, early 2023, he and I were kind of talking back and forth, and I said to him, I was like, look, I know you're doing things deal by deal, but what do you think about starting a fund? Because I've always wanted to start my own fund. Being in New York City for a number of years, I always thought it would be really great to start a fund so that we could invest in different companies. And so he was kind of like, yeah, no, absolutely, let's do it. So we got accepted into an accelerator program and sort of very quickly ramped up, with VC Lab, and was able to launch our first fund in June of 2023. And
mhm.
so over the last, 18 months or so, it was a lot of time spent on fundraising, of course. Not the easiest environment for
Yeah.
fundraising, as everyone knows, right?
Yeah.
So it was quite the journey. And, we had a very aggressive timeline because typically most funds, they will do their fundraising and then they'll start deploying capital. We sort of had a very focused vision on what we wanted to do, how we wanted Waterpoint Lane to grow. And so we actually started deploying capital as we were fundraising.
Mm,
And so kind of throughout that journey, we've kept in touch with numerous entrepreneurs. We've been doing a lot of analysis on a lot of these companies. And so over the last 18 months or so, we've gotten about 8 different portfolio companies. There's a few more that we're closing on over the next few weeks. And so we've been able to deploy some capital into a number of these companies, many of which are very much award-winning companies that span across, regenerative agriculture, AI robotics, supply chain optimization,
mm.
energy transition, and so forth. So it's been a very exciting journey.
Yeah, I can imagine. I mean, it's also very rare to have the possibility to invest capital even before you actually close the fund. So it's something very curious, you know. Usually, you have the amounts and everything else before you can actually be able to start investing. So that's very interesting. At the same
Yeah.
time, you mentioned it. Maybe this is one of the hardest time ever to actually start your own fund, you know, because it's very hard to go fundraising out there right now with the kind of environment that we have. And I wanted to understand your experience about it, you know. So it has been probably an 18, maybe 24 months of pain going through it.
Yes, I would say that fundraising is probably the most challenging and painful part of
Yeah.
our journey so far. It's very difficult during, great years. It was even more difficult the last few years, with the
Mm,
interest rates being high, with sort of all, everything that's been going on in the marketplace. And also too, from our perspective, being a first time fund manager, it was very, very difficult. A lot of investors that we spoke to, especially institutional ones, right? They're very much, come talk to us.
mm,
Fund three, fund four, maybe fund two if you're really,
yeah.
really good. And we see amazing, amazing exits, but a lot of, we a lot of rejection, right? So nobody likes rejection, but it's something that we ultimately had to face constantly. And so we
But it's kind
really,
of normal, I would say, you know. So
yes.
you need to knock on a lot of doors to actually to land, yes, basically.
No, exactly. And, the fact is with us, because Ben, my business partner, had started, kind of doing some investing through SPVs, we did have a little bit of a track record. So we were able to take some of that historical data end results to a lot of the the investors that we spoke to, which were mostly high net worth family offices that have a lot more flexibility. And so in kind of talking, sharing with them about our vision, what what we were focused on, especially around, B2B, and getting
Mm-hmm.
them really excited about the potential for growth and opportunity in the sector, we kind of were able to grow out, that investor base. And on top of that, in the meantime, we've been building out a lot of the relationships on the institutional side as well. Because as I'm sure you know, that can be a very long, it's a
Mm-hmm.
long, long sales cycle, right?
Oh,
So
yeah.
we've been kind of building a lot of those relationships and helping them understand us, as a firm, and also especially our portfolio as well, and the types of CEOs that we work with.
Yeah, coming from the financial services industry, I can only say that, an average sales cycle is between 18 and 40 and 24 months. So, yeah, it's a long way to go there. Yeah, but
Yes.
let me come back to one of the points that you just mentioned. So your business partner was already doing an SPV and was already doing deal by deal. At least in my experience, this is one of the most common way to actually start a fund, building a little bit
Absolutely.
of track records to actually be able to go out there and speak to financial institution and say, okay, I already know this game, I already have the network, I already have the kind of skills and competencies over time. So how critical do you think it was, that experience, to actually being able to open the first fund?
Oh, it was very critical. It was very critical because it actually gave us, kind of the runway to be able to speak to investors about, the experience, about some of the results that were already coming in. Some of the deals that, that we'd invested in previously, when the investors that we were talking to during the fundraising process, it was really helpful to have that historical data. And so, as part of that, as we continue, that's why also that when we were doing our fundraising process, we were also starting to deploy capital into
Mhm.
portfolio companies as well, because our vision is for a much larger firm. We're going to do fund two, fund three, fund four,
Mhm.
and so forth. And so, as part of that whole vision, we've been kind of very proactively investing and proactively building out those relationships.
Mhm. No, that makes absolutely sense. So maybe let's talk a little bit about your investment thesis. So you obviously have a focus on the food industry that maybe cover multiple topics. There's a lot of things going on in food and beverage as a market overall that cover also the
Absolutely.
environment and cover different kind of topics. I would like to understand, how do you try to diversify or at least stand out from the crowd in terms of funds in having your own investment thesis, and how do you plan to bring value, in the market with your investment thesis?
Yeah, so we are, our sort of area of focus is already kind of niche because it focuses around ag tech, food tech. And sometimes when investors hear about it, they're not associating it to AI, robotics,
Mm-hmm.
incredibly innovative technology. And so
Mm-hmm.
we really focus on, we don't do consumer, we're focused on B2B, B2B companies that are, sort of transforming the food system, whether it's from a supply chain perspective, whether it's from an upcycling perspective, circular economy. A lot of these companies are doing things that are very industry changing. So, as an example, one of our larger companies, they've grown very, very quickly. It's called Myland. So they
Mm-hmm.
do soil regeneration. They are based out of Arizona, and they very quickly expanded their product across the nation, working with large farming organizations. So a lot of folks don't realize, down the road, 95% of the soil will be degraded, and so we have a huge issue. We're going to have a huge issue feeding the population. That issue is already very much alive today. Given a few more years, a decade from now, that's going to be an even bigger issue. And so Myland really seeks to solve that, to solve that problem through their product. It's soil as a service, so a different type of SaaS model, but it really kind of works with a lot of the farming businesses out there to regenerate the soil.
That's very interesting. That's also one of the problem that was present in the past, also centuries ago. When people were actually cultivating the land, and trying to find out which was the best, type of agriculture to actually have a good outcome.
Yes.
Yeah, in terms of products. So it's very, very interesting. Let's talk a little bit, let's say, about the kind of environment that you are behaving in. You said it before. You are in the East Coast in the US at the moment. You are coming from one of the best, if not the best, risk capital market in the world, the US. So I would like to understand your point of view in that kind of market right now. So the US has always been one of the main point of reference in terms of venture capital. There's a lot of discussion going on about the other markets in the world on how they should try to bridge that gap with the US. So I wanted to ask you, what do you think makes that kind of difference between, the kind of mindset that a US based investor have compared, for example, to Europe or to Southeast Asia?
Yeah, no, that's a great point. So, in the US, so I'm actually Canadian, so I'm not an
Hmm.
American, and I came to the US, when I first moved to the US, I went straight to Silicon Valley. And I think one of the reasons the US is such a vibrant market for venture capital is its focus on innovation. It really, really, kind of across the board, having been both in New York as well as Silicon Valley, there's really the general environment and excitement around innovation, around disruption. Everywhere you go, there's things move very, very quickly, and that's one of the reasons why, for now, we're focused on a lot of these portfolio companies that are in North America, particularly in the US, because there's such a focus around innovation and the technology as well. There's always different things that are happening. If you look at, and also to the regulations, I think that's one of the biggest areas as well. It's easier to, to set up your business. It's easier to find communities where you're able to network with different innovators and entrepreneurs. It really drives and encourages a lot of entrepreneurs to be creative. There are different tools and resources for entrepreneurs to be able to innovate. And that's very different than sort of other parts of the world. I think Europe is fantastic for many, many reasons. There's certainly a lot, what I feel is a much bigger focus around sustainability.
Mm.
So there's a lot of, the thing is with Europe, there's a lot of regulation.
Yeah.
It's not as easy to set up new businesses. There's not as much, from an innovation perspective, it's a little bit more challenging, but obviously there's a lot of, for a lot of the different countries, they are building up a lot of these hubs around innovation and creating that environment to innovate. But I think the US, where it really, really stands out, is not just also in Silicon Valley, but also, in New York. I'm currently based in Miami. So in Miami, there's a lot of these communities as well as entrepreneurs
Mhm.
and just tools and resources that are available for growing innovation.
Mm. And what's the comparison maybe with Canada? I think that from at least from a geographical perspective, you see the two countries so near and everything else that you can think of them as comparable. But I would love to know the differences, between with the venture capital ecosystem maybe in Canada and the kind of innovation ecosystem in Canada compared to the US, given the kind of proximity that they have.
Absolutely. So there are so many great schools in Canada. Canada's more understated, as we say.
Mm.
So I actually did my undergrad in electrical engineering at the University of Waterloo. So Waterloo is
Hmm.
sort of the home base for companies like BlackBerry. There's a lot of innovation happening there. But what I would say is, just in terms of the community and again, the base of folks that are there, what you'll see is, a lot of those entrepreneurs and companies, they tend to move to the US just because
Mm.
it is easier. There is a bigger environment for, for that innovation. But with
Also to
that said,
scale
right,
up, I would
you
say.
get a,
Yeah.
yeah, with that said, you get a lot of folks, especially in Vancouver that are frequently in Silicon Valley and vice versa.
Mm.
And also between Toronto and New York as well. And definitely, Toronto and Miami. There's a lot of that crossover because like you said, it's easy access on the border there. And so there's a lot of collaboration between the two areas.
Hmm. No, then, I would have imagined something like that, to be honest. But I would love to see, the kind of difference there. You have been talking about also having a relationship with with Europe and everything else. So I'm sure that you have been talking also to with LP and family offices in the US. How do you see the kind of differences under that point of view. So one of the theses that we have in Europe is that we have a lot of wealth in terms of assets, in terms of liquidity that has been in the hands of a multiple of multiple families, of course. But we do not have that kind of push for innovation or push for risk in order to invest that kind of wealth. While, for example, at the opposite side in the US, there is a lot of kind of families, business families, and family offices that are investing heavily in the venture capital ecosystem. So I was wondering if you have that kind of perspective, talking with the both of them at the same time. What do you think is the kind of leverage that is pushing US based family offices to actually invest in venture capital, and what's taking back family offices in Europe to actually do that?
Yeah, so I think in the US, it's very much, from our discussions with the family offices over here, they move much quicker and there's
Mm,
much, because of that push for innovation, they tend to be very, very focused on the companies, on the results from the fund. It's more, transactional, if you will,
mm,
where
yeah.
they're very much looking at the numbers and the results. And so, there's not as much of, if they feel that you're doing great work and you are, and this is an area that they're interested in, there's a much faster speed to deployment of their capital
Mhm,
within the fund. In Europe, I think, there's definitely a greater awareness and greater support around sustainability, around impact. I think in general, many investors care about the sector and area, which is great for us. But Europe, I think, from a relationship perspective, it's a longer cycle, and they
mm,
they sort of want to see, they want to see more, sort of referrals. It's a longer term process.
mm,
So it takes longer to build those relationships. You have to be more based more locally. You have to have very local, sort of very local folks that are helping you out and providing references, and
mm.
they have to see that you're kind of immersed in that area as well.
Yeah,
So that all
it
adds to
will
the
always
time.
be, yeah, it will always be a network business, this one.
Exactly.
Yeah.
Yes.
Let's talk a little bit about the kind of operation that you're running. So one of the topic that we have been talking more frequently and more recently with VC is the kind of value that they're able to provide to the startups once they're in the portfolio. So I was wondering, how do you actually manage your portfolio, the kind of startups that you already invested in? So you do an active or proactive approach with them? How do you actually try to help them out to grow?
Yeah, absolutely. So value creation is a huge part of the value add on our end. And, as we've been investing in emerging companies, we are very much, we were very much an emerging manager for Fund One.
Mm,
And so we actually, built very close relationships with our CEOs, and it was very much a partnership between us. And so there are a number of different ways that we've been working with them, from a client perspective, from a strategic partnership perspective. Some of them we connect them with customers that we know within our network. So we have a pretty expansive network across, technology platforms, across, other investors, across service providers. So there's many different ways that we add value to them.
mhm,
And one of the things that we often help our portfolio companies do is we will evaluate sort of their operations and whatnot, and work with the CEOs directly on some of the areas where we see opportunities to help them grow and scale, opportunities for
mm,
improvement. And so as such, typically we tend to, even though, we're small,
mhm,
we tend to be the lead investor. We usually
mm,
take a board seat. So right now there's not 100 portfolio companies that we're working with. So
mm,
we're able to do that. And as we continue to scale and grow, we will continue to bring in subject matter experts. So we've already been building out a strategic advisory board. We've been bringing on very specific senior executives that have, that have subject matter expertise in very
mhm,
specific areas. Some of them are scientists. Some of them are, investment, very specific investment experts in certain areas. And so we have, because of our network and because of the reach that we have, we're able to put together sort of the right teams that are able to assist those portfolio companies to their next level of growth,
mhm,
eventually leading to that large valuation and exit that we're looking
mm.
for.
Yeah, you're mentioning the kind of expertise that your advisory board have with them. How important do you think it is distribution instead of product in a market that is so, critical as food? I think that maybe distribution is one of the key area where you can actually bring out that value using, your network, your expertise, and everything else. So, how important do you think it is, maybe compared also to the product itself?
Yeah, I think it's distribution is one of the most important things because today now with the prevalence of technology and with the speed of change and the way that companies are transforming and moving because everything happens so quickly, there are just so many different choices out there no matter what sector you're
Mm,
in. And unless you stand out, so you certainly need great products, but you also need to be able to stand out in terms of the distribution and how quickly you can scale. And to
mhm,
your point, that's a big part of it is being able to get in front of the right customers, that you're with the right distributors, and then you're very quickly able to scale across the board. And that is a
mm,
huge deterrent. That's a huge determinant of whether or not a company is successful over the long
mhm.
term.
Yeah, most probably you have a lot of connection with the main distributor in the US like Walmart and all the others. I think that that's one maybe of the key criteria on how to scale up those kind of companies, mostly in that industry.
Absolutely. As an example, so all of our portfolio companies have some sort of a strategic customer or strategic
Mm,
partner that they're
yeah.
working with. And, so one of them, for example, is working with Diageo,
Mm,
Coca-Cola. So from a distribution perspective, from a branding perspective, they're getting their names out there very, very quickly and they're able to, scale. So one of the issues that we tend to run into with some of our portfolio companies is because they've done such an amazing job with distribution and
mhm,
marketing, getting their name out there. They have to work very, very quickly and grow very quickly in order to fulfill the demand that's
mhm.
kind of getting ahead.
Yeah,
So it's a great problem to have,
yeah.
but yeah, that is an area that we really focus on.
Yeah, coming from the fintech world, we always saw that kind of pushback from bigger brands, or for example, bigger banks in the beginning when startups were trying to innovate the space. So I was wondering how those kind of brands reacted to those kind of startups coming into their market. Like for example, how Diageo or Coca-Cola or Walmart reacted when there were a lot of new startups, new name coming in the market, trying to innovate, trying to bring new products. They were supportive in the beginning, or they tried to oppose a little bit.
Yes, I think it's always tough working with large, very, very large companies, right? There are so many layers of bureaucracy and
Yeah.
people that you have to go through. And having been on both ends of them, because, I came from companies like Amazon and
Mm.
T-Mobile, BlackBerry, these large, large firms where you have to really get through all these layers of procurement and all of these other teams. It's
Committee
certainly
and everything.
difficult.
Yeah.
Oh, yeah, absolutely. And so that's why it's so critical, oftentimes at the CEO, so we really, when we look at our portfolio companies and we decide to invest, we really look at the CEO and how good they are at sort of getting in front of the right people, getting their product into the right sales channels, how good they are at, quite frankly, from a sales process, right? From
Hmm.
marketing and branding. And these CEOs that we have in our portfolio have just been incredible in terms of getting in front of the right people, having those connections and advisory boards, because they also have, board members, they have, other strategic advisors that are helping put them in the right spots. And so
Hmm.
in order to get into a Walmart, to get into a Coca-Cola or a Diageo, to even be on their radar, right? Because they're bombarded with thousands and thousands of
Yeah.
companies that are trying to get in front of them at all times. These CEOs have to be absolutely spectacular at being strategic and being able to get in front of these folks. And so that's one of the things that we really look for, especially when we're looking at talent. That's
Mm.
really, really important. And so, so some of them, they've already done such a great job. They've won awards, whether it's through robotics, AI, innovation. One of them has won the Earthshot Prize for what
Mm.
they're doing. And so it's just been really, really an incredible, roster of folks that we've been looking at. And so they've done a really good job. And we seek to help expand that, particularly from a private equity perspective.
Mm.
So, we work with a lot of private equity firms, kind of indirectly. And where the opportunity lies is the ability to scale and be able to deploy a lot of these products across, their portfolio companies as well. So when we come in and we talk to, our CEOs, and we're always looking for opportunities where, there's potentially an exit opportunity, corporate strategic buyers, we're always thinking about how we can help them scale and get them to
Mm.
the right folks, so that it's marketed properly.
That's very, very interesting. So you basically have a thesis about the sorry, the exit strategy. So collaborating with private equity and with those businesses, you basically provide an opportunity for all the startups in your portfolio to actually have an exit if they want, of course.
Absolutely. The exit is one of the most important things. And we actually kind of pride ourselves on that being an area of distinction for us.
Mm.
And one of the things that we do is when, again, like when we are talking to companies, when we're going through our selection criteria, we're always thinking about the exit, right? Because that's obviously
Mm.
when, you get the returns, when we're able to distribute to our investors. And so a lot of these, when we talk to the CEOs, some of them, haven't thought about it. The ones that are in our portfolio, they've all thought about it, and they're working
Mm.
backwards from this result that they've already envisioned, that they have already thought about, that they're already building the plan around. And that's what we're really excited about as well, to help them achieve. So it's a very important part of the strategy. It's a very important part of the vision. And so we work, very closely with our CEOs to kind of help make that vision into a reality.
Mm. Yeah, I think it's very important. Also considering the kind of period that we have been through, we come from 2 years of low liquidity and low, most of all, liquidity events. So low IPO, low restructuring, low M&A, and everything else. So one of the most problematic things that we went through is the lack of those liquidity events and lack of exits also for the VC. So I think that including that in your investment strategy give you an advantage in this kind of field that is very, very hard to reproduce because everyone else out there is basically waiting for those liquidity events without any strategy in place, or at least structured strategy in place.
No, and Michaela, you brought up such a great point because a lot of the investors that we've spoken to are LPs. Oftentimes, they say they're like, look, we don't know Waterpoint Lane. You guys are
Yeah.
new. We don't know, we invest with large VC firms, and
Mm.
that and they tend to want to go with the big brand names.
Yeah.
Right. But then what happens is, and they've said this very clearly, is like, okay, we haven't seen, we'd like to invest with you, but we can't take our money out because it's haven't seen an exit strategy, haven't seen an
Yeah.
exit in years, right? And so, and then that makes me just go, well, there you go, case in point, rest my
Yeah.
case. And it's not to knock larger, VC firms or anything like that, but it's just when you are small and you are nimble, you have to be very, very nimble, and you have to be, because we just don't have the extra capital to kind of play around with. So every single thing we do has to be very purposeful. It has to be very strategic. And it has to drive results, within the time frame that we sort of
Mm.
targeted, right? Because, again, because we're small, and because we are small, we have to be very, very,
Yeah.
strategic.
Absolutely, yes. So you are mentioning the fact that you are looking for the kind of connection and network of a founder before investing. So I was considering which are the main criteria that you are using when selecting an investment. I'm sure that you receive probably hundred of pitch decks every week, but how do you actually choose which one to invest? Because that is one, in my opinion, of the most interesting selection criteria and processes that VC has. And every VC have his own, kind of criteria and kind of process. So how do you actually choose them, and how do you actually choose which one of them to invest on?
No, absolutely. So we have extensive selection criteria. So I'll just kind of
Mm.
go through some of the key highlights. The CEO. So again, this is where it comes from to the art and science. We certainly look at the numbers, right? The
Mm.
financials are super important. But obviously, if you're looking at sort of more seed stage, like late seed stage companies, the numbers only get you so far because there's only so
Yeah.
much you can predict. And if it's going to be super innovative, they're creating a market that's not even there. And so there's a lot of different things you have to take into account. But a lot of that is, also, looking at the CEO, seeing how strategic and how visionary they are, because they're the ones that are really creating the environment, building the team, and sort of building the right ecosystem for the company to be successful. And so, that means, so we often look for things, from an infrastructure and platform perspective. So meaning, do they have the right infrastructure and platform to scale very, very quickly? Are they using super old technology? Are they, kind of outdated? We actually looked at a number of different companies, especially when we were looking at the food upcycling space. And, we just saw right away that in terms of their operations, they were not going to be able to scale. Because it was very manual, it was very disjointed, and we could see right away that it was not going to change anytime soon. Where some of these other companies, you see right away, they're set up to scale very, very quickly. They're low on sort of extra personnel. It's very, very high on technology. And the CEO has a very strong vision of how they're going to scale and grow quickly. So that's one of the things that we definitely look for. So we look for the ability, the existing infrastructure and platform to be able to scale. We also look at burn rates. How are they going? How they're using their funds, and right, because all of these companies, you don't want them to be constantly fundraising. You don't want them to be constantly and the CEO to be constantly worried and out fundraising, because they should be running the business and getting it to scale very quickly. We also look at, in terms of churn rate as well. So many of them, because we typically tend to look for companies that are already generating revenue. They might not necessarily be profitable already, but they're definitely generating revenue. They have strategic clients, in terms of their churn rate as well. How are they managing their teams? How are they managing, their executives? What does their leadership team look like? How are they managing their resources? So a lot of that all goes into kind of the overall success of the companies.
Well, that makes a lot of sense, to be honest. I think that one of maybe a curiosity here. Do you actually do also the technology due diligence or only the financial one? Because you were talking a lot about the technical infrastructure. So I suppose that you guys also take a very good look on how this kind of businesses works on the back end.
Yeah, absolutely. Technology, because it's such a large part of what we look at. So all of our businesses are technology oriented.
Mhm.
So we are looking for disruptive innovation. So these are companies that are kind of changing, that are industry changing. They're each doing something that's a little bit different, that will help the industry evolve. And they are, sort of creating a whole new, marketplace, if you will, for that industry to grow. And so from a technology perspective, we're definitely, we spend a lot of time with the CTO if they have one, and depending on where they are, with a lot of their technology teams, understanding how they're thinking about the future, how they're future proofing their technology. But oftentimes too, people think that, because they're saying, oh yeah, we're super high tech. They don't see, they're not relating it to the business model and to their clients. So we've come across a number of companies where they've told us like, hey, look, we're super high tech. We're very AI oriented. We're creating all this data analysis, for farmer economics, but they're not really thinking about the customer journey. And so that is something that we look into very, very closely, because where is that customer journey? How are they actually going to use the technology? Are they even going to use it? Is it creating value? Is it providing, sort of that value for the customer? And oftentimes too, like in the course of, because we come across all sorts of different folks, sometimes the scientists, the super, super smart scientists, the technologists are not necessarily thinking about the customer journey. They're not thinking about, beginning to end, what's it like for the customer, right? It might be brilliant at the end, but then, when I think all of us have used technology, right, where you're like, okay, this is amazing, right? But I have to pull my hair out in order to make this work. Like it doesn't functionally move properly, right? And so we look a lot at user experience, at the customer, customer experience. So that's all part of our diligence when we go through, the products that we're looking at.
Yeah, that is very, very common, with people that come from a technical background. They have a huge understanding about the system work. Maybe they have great or wonderful ideas when coming to innovate that space, but they tend maybe from time to time to stick a little bit too much with the technical side. You need to take in consideration the final user anyway. That is even more complex if you are talking about a B2B or a B2B2C environment, because you have to take in consideration your customer, your customer's customers. So it's going to be
Exactly.
even more complex, and it's not always the most innovative product, the one that win the race. Because from time to time it's just the
Exactly.
easy to use one that actually gain a lot of traction and everything else. So it's a very good point, a very interesting one. Maybe just staying with this topic a little bit. So you've been mentioning, businesses that are trying to innovate in that space, that are trying to disrupt very deep tech. So which are the main trends that you are looking for in the food ecosystem right now, or in the agricultural ecosystem? So which are the things that you think will shape that market in the upcoming year and maybe in the next 5 years?
No, absolutely. So, one of the problems that we're solving for is around food waste. And so,
Mm,
food waste, it's a multi-trillion dollar problem. And we're not just talking about, when you say food waste, people tend to think about, okay, it's just food that you throw out that's already
mm,
cooked. But it starts well before that. It starts at the beginning of the supply chain, when it's in the process of being produced, when it's going through the manufacturing process. And
mm,
so, and then afterwards, when it goes all the way through to the restaurants, to, being consumed, and to the other end of it. And so we are looking at a number of different, well, we actually have invested in some companies, one of them being Upcycled Foods, that
mm,
repurposes grains and creates new products, newer and healthier products, as part of the process. And so that is one of the areas that we see, that's going to continue to be, it's going to continue to grow, because also a lot of the food that we consume, it has a huge impact on health and wellness as well.
mm,
And so as we kind of continue to grow as a firm, health and wellness tech is another area that we're looking to expand into as well. There are
mhm,
a lot of different solutions that have been put out there, in terms of health and wellness. And so with the food system, one of the companies that we've invested in, they're actually tracing, how the food moves through the system. And this is actually part of the compliance, that will be going into effect in 2026, where
mm,
there's a need to trace how the food goes through our food system, because there have been
mm,
so many issues with a lot of the diseases that have happened, a lot of cancers, because of the different chemicals and ingredients that are being moved into the food system. Another thing that we see as well, which we also invest in, is around supply chain optimization. So a lot of the issues that we see with food is because, it's being transported from larger distances. Besides the large carbon footprint, there's also an issue with the quality of the food as well. And so one of the companies that we invested in, called Relocalize, they're actually focused on delivering local food and beverage,
mm.
to the various distributors throughout North America. And so they're starting off with ice first, but that's kind of where they'll plan to expand to in the future.
Correct me if I'm wrong, but I think that there are a lot of common points between maybe the food industry and the environmental one. The green tech trend that is going on all over the world. So, do you think that the two industry will kind of merge in the future? Not of course from a final user perspective, but at least from an investment point of view. There are so many things in common between the two, and so many, string attached and everything else, that probably the two will be so, more and more in the future as one big, investment thesis.
No, absolutely. There's already crossover in that area, because,
Mm,
as you kind of reduce the carbon footprint, you're also, kind of creating solutions on the other side of it. And actually, one of the, in terms of growth, so I mentioned, kind of the degradation of soil earlier, right? Which, from an environmental perspective, it's detrimental to, the
mm,
future, for growing food. But out of that, there's also been, there's been this explosion of various other ways to grow food, which are also, more environmentally friendly, that are, utilizing greenhouses, and especially within large city centers, because, you don't have access to farmland. It's
mm,
very,
yeah.
and again, we talk about sort of the localization of food, the farm to table concept. There's been these new solutions that have developed, and one of the companies we're looking at right now, it's actually sort of like a greenhouse type of solution that allows for better growth within a greenhouse environment, that works very well within the city, within,
Mhm.
city centers. And so that's creating a better environment. It's also more sustainable. And then also from an investment perspective, because we focus very much on, collinear investments. Oftentimes we get asked, right? It's like,
Mhm.
well, if it's impact, then it's not making money, right? Or if it's sustainable, it's not
Yeah.
making money. And we're like, no, no, you don't have to, it doesn't have to be one or the other. And in fact, as we're investing in this disruptive innovation, it actually comes together very, very well. So we are,
Mm.
on one hand, it's creating a solution for a problem that needs to be solved, like, degrading soil, food insecurity. And on the other hand, because there is a need for this solution, it actually generates fantastic returns for investors. So
Mm.
it's very much a circular solution from my perspective.
Yeah, that makes a lot of sense. Maybe last question from my side.
Yeah.
If there is one characteristic that you could name in a founder that you are looking for, something from a personality perspective, something that every founder in your portfolio should have, what that could be?
I would say resilience. I
Mm.
think it's very important to have resilience because you are going through so much from a fundraising perspective, from building out the business, from dealing with your customers, you're dealing with investors. It's a grind, and it's not a long, we often hear of these very exciting stories of entrepreneurs that become billionaires or millionaires overnight. There's that
Yeah,
big IPO. It's like, yeah, that didn't start yesterday.
yeah,
That wasn't something that happened overnight. It was like an idea that had to grow. And then you have to go through many, many ups and downs. Unless you're already a millionaire when you first start, you're going to go through a lot of cycles of like resources, when you talk about entrepreneurs that started their business out of their garage, some of them are lucky if they even have a garage, right? Like there are a lot of lean and mean years,
yeah,
as we call it, right? Hey, we deal with that as well, even as a venture
yeah.
fund,
It's normal.
because, we're not Blackstone. So
Mhm.
we go through our ups and
You
downs with
you're
our
a founder in the
fundraising.
end.
Exactly, right? We're kind of in the same boat in many
Yeah.
ways. And so, when these entrepreneurs they are faced with oftentimes, if you run out of money, if something goes wrong with the business, you have to be able to keep going, because if you can't, at the first sign of trouble, if something goes wrong and they're not able to overcome it, they're not able to be creative, they're not able to be just so completely focused and confident and believe what they're doing, you can't overcome it, because there are so many obstacles before they get to the level that we're looking at, right?
Mm.
Because when we are looking at these companies, they are at, they're generating revenue. They have some pretty decent customers, strategic customers in the pipeline. So to even get to that point, they have done so much work already, and
Mm.
they have overcome so many different obstacles. And if you're not able to do that, you can get crushed very easily, very early
Yeah.
on, especially when you're looking for funding, things can go wrong in these types of market environments. There's so many different things that could happen. It's very volatile. And if you're not focused and you're not resilient, it's very easy to fail.
Yeah, I strongly agree on this one. I mean, so many things, different things can happen in this environment. The market can shift from one month to the other, and if you're not totally prepared to the unthinkable, you will never be able to succeed. So you can get lucky, of course, but most of the time, be prepared for everything is key. Even for something that you cannot be prepared to. So strongly agree on this one. Meifan, it was a pleasure to speak with you. It was a great conversation, and I wish you all the best in the upcoming deals that you're going to be looking into.
Thank you so much for having me. This was really great.
Thank you very much. Have a nice day. Bye.
You too. Bye.